Hong Kong's home prices are among the highest in the world, but it's seen a decline in recent months. These secondary property units were placed in the market over a week. The sales volume is okay, but not as good as last year, says Raymond Lee, who works for the city's leading property agency.
Interest rates are raised and the mortgage is higher. Secondly, on average, Hong Kong prices are too high. For average people in Hong Kong, it will take up 20 years of people's income. Those signs suggesting Hong Kong property is in the bubbling territory and is probably going into burst phase.
Lee said new home sales in the city are also feeling the crunch. This month, new home transactions only average 73 sales, but the highest monthly average is usually more than 500, with the lowest near 300. Actually, the property transactions fell 12% in 2015, according to the government data showed earlier this month. The Centaline Property Index also reports that home prices have dropped nearly 10% since September, and January monthly sales fell to the lowest since at least 1991. Due to property market decline, many buyers are waiting to purchase a home, leaving some smaller property agencies to close their doors because of weak sales. This year, Sang Hong Kai Properties placed new units on the market, which is 15% lower than the units launched in the same district last year. And Hang Lung Properties Limited, which reported full-year 2015 earnings last month, said it had sold just 63 apartments and some car parking spaces. Company profit plunged 57%.
People are not buying in anticipation of interest rate hike from the U.S. and because of the monetary board here in Hong Kong. Basically, the Fed is our de facto central bank. And secondly, on average, Hong Kong price has risen substantially in the past 5 years since the 2009 recovery. So those are some of the signs suggesting that the Hong Kong property market has been in a bubbly territory, and now it's probably going into a correction phase.
Hong Hao adds that prices could be down 50% from the peak. Investment bank UBS forecast earlier last month that Hong Kong home prices would fall by as much as a quarter by the end of 2017. Adding to the bleak forecast, Raymond Lee expects a 10 to 15% decline this year as well. Zhu Dan, CCTV, Hong Kong.